This Spot Bitcoin ETF update is presented by Grayscale, the world's largest crypto asset manager. Spot Bitcoin ETFs have stolen the spotlight in 2024. CoinShares head of research James Butterfill joins us now to share his perspective on the ETF narrative moving forward. James, welcome to the show.
Hi, great to be on the show.
Great to have you here. Now, what do you make of the Spot ETF performance so far?
Really impressive. I mean, I think it initially started off being a little bit disappointing with regards to the price movements, but it's quickly became clear that a lot of buying for the seed capital for the newly issued funds like iShares and Fidelity happened prior to the actual launch day, while Grayscale was selling quite a lot. And so in essence, we saw that negative price pressure. But what we're seeing since then is the Grayscale outflows sort of slow right down, and the inflows are sort of picking up a little bit now for the US newly issued ETFs. And so we're at a situation now where we're at $4 billion of net inflows since launch, which is way better than, say, iShares gold products, which in 2003 had 125 million.
Is this what we expected to see, or have there been some surprises in the past month or so?
I think it generally was expected. It was quite difficult to, I think, really put a proper number on how big the inflows really would be. I think on reflection, perhaps it's starting to be a little bit better than expected, given just how popular and how strong the inflows have been.
Let's talk about the future now. You know, from your perspective, how much do you expect to see flow into the ETFs throughout the rest of the year?
That is, again, I think it's really difficult to quantify this number. You could annualize the current numbers and it would break all records, including for any ETF launch if that happened. So I think it's perhaps a bit dangerous to annualize at this point. You know, it's quite rational to say sort of, well, if you look in 2021, we saw $10 billion worth of inflows. So it's quite rational to say we could hit that sort of point, and that would have quite a positive effect on price. I suspect we would definitely beat the all-time highs of 69,000.
What do you think some of the driving factors are here? Why do you think we're seeing so many inflows?
Yeah, I mean, it's not, so the ETFs do have an effect on price for now, but that will calm down. And I think what we'll start settling back on to is market fundamentals, and the fundamentals are quite constructive. So a big one is Fed policy. It looks like they will cut rates this year, and perhaps a little bit too late to cut rates. And so they might more aggressively cut rates than expected. I definitely think that's going to drive prices. We've got the halving, which at least historically has seen price rises. I'm a little bit skeptical because after the halving in 2020, a lot of the price rises perhaps were due to COVID stimulus checks. But I think loose monetary policy, the Fed's in a difficult situation. If they decided to hike rates, it would cause real problems in the banking sector, which are already happening again. If you look at New York Bank Corp, for instance, the bank there is in real trouble. So there's plenty of supportive factors for Bitcoin prices.
That's interesting. You say you're a little bit skeptical if we look at 2020 data. Unpack that a little bit more for us. What do you expect to see happen to the price of Bitcoin after the halving and inflows into the ETF after the halving?
Yeah, I think the Bitcoin price will continue to rise. We almost definitely will likely test all-time highs, and many might attribute it to the halving. I'd say it's perfectly known information and therefore shouldn't or have an impact on price. But yeah, testing all-time highs is a good one. It's going to be a volatile ride upwards though. But yeah, let's say if we had 10% of inflows of assets under management, that's about $14 billion of inflows. That would be a record. That could push Bitcoin prices over 100,000.
Coming back to the ETF now, are there any asset managers that you expect to stand out from the bunch? So if we look, let's say, a year into the future, what asset managers do you think are going to have the most funds under management in these spot ETF products?
Which asset managers? Oh, it's difficult. Certainly, if you look at an asset manager who has an incredibly strong distribution team, a deep set of client relationships, they're the kind of asset managers that are going to do really well in this environment. And it's testament now. You just have to look at BlackRock, iShares, and they're doing incredibly well, and I think it was indicative of their strong client relationships and the massive sales department. And those smaller products, which perhaps don't have that same ability, the same marketing ability, I think will struggle. That said, I mean, all of them are doing pretty well and are well past the kind of marginal costs of running the ETF themselves.
I mean, if we look at gold, they all could continue to do pretty well, right? They could all be winners in their own right a year from now. There doesn't have to be a standout.
Yeah, there does seem to be that narrative at the moment of Bitcoin cannibalizing gold. It does look like, well, I just tweeted this morning exactly that point. Not all of the outflows from gold are going into Bitcoin. There's a lot more outflows in gold, that is, than inflows into Bitcoin. So it could be very supportive. Just if I was, some people might think saying 100,000 Bitcoin is a bit crazy, but if you were to sort of readjust that narrative and say, well, gold could take 17% or Bitcoin could take 17% of gold's market share, that is a price of 100,000 for Bitcoin. In that respect, in that context, it sounds quite reasonable.
BlackRock and Fidelity are two of the standout asset managers in the spot Bitcoin ETF game right now. They also both have spot ETH ETF applications. Do you think there's a potential that we'll see an approval on that spot ETH ETF this year?
Our head of compliance and product is skeptical it will be May. I think there's a lot of hopes pinned on May. I don't think we're quite in the depths of the details of some of the people. Certainly some of the Bloomberg analysts are coming up with May. I think it's May the 23rd. It's quite possible. The Fed could delay it a bit longer. That might lead to disappointments. Don't forget last September when people were very hyped about the Bitcoin ETF launch and it didn't happen. The SEC has a bit of a track record of disappointing, but I think I can't see any roadblocks to it not happening eventually at some point this year, perhaps Q3.
And what about other assets like XRP or SOL? There's some chatter that, once we get an ETH ETF, we could see other assets become ETFs. Do you think that's possible?
I think it's harder there, partly because launching an ETF, you need a deeply liquid market. And as soon as you step outside of the realms of Bitcoin and Ethereum, suddenly the liquidity is a lot lower. So it's a lot harder to scale a product like that. And also, I think the SEC, from a regulatory standpoint, have been talking about everything other than Bitcoin and Ethereum. Those two have mysteriously they've been quite quiet on in terms of yield, in terms of staking and it being a security. There's still those question marks over the Howey test for many of the altcoins other than Ethereum. And so for that reason, I think it might take a little while longer before we see ETFs in those products.
James, we got to wrap there, but thanks so much for joining the show today and providing that insight on what might happen with ETFs as we move into 2024.
My pleasure. Thank you.